Good day, fellow investors. This is the time to pound on investing principles and fundamentals. Now that stocks are down 7% over 5 days, 20% over 6 months, and 23% over the year, now is the time to really discuss investing fundamentals. Because there is a lot of panic, stocks are going down, which is completely the wrong focus here. And then if I look at the population that's watching YouTube, likely this would be the average for all, only 3.4% of my population is 65 plus years. Okay, so only 3% of you are there to spend your money or should be protected. But okay, if you're 65, if you have been invested for the last 40, you are already pretty rich. But all of the others, 96.6% of people should actually embrace crashes. So stock market crashing should be orgasmic for you because it makes things cheaper for your wealth accumulation. Think about it. Stocks going up, your salary, your new inputs in your pension, you are paying more. The returns when you pay more are lower. The returns when you pay less are higher. It is much better from a risk and reward return perspective now to buy something than here. This is the only truth you need to know when it comes to investing. I know this is hard to understand, and that's why I want to pound on these videos now. If we go to 1977, Berkshire letter to shareholders, we ordinarily make no attempt to buy equities for anticipated favorable stock price behavior in the short term. Who cares where the stock price goes in the short term? In fact, if their business's experience continues to satisfy us, we welcome lower market prices of stocks we own as an opportunity to acquire even more of good things at a better price. This is what made Warren Buffett rich, and we know the return over the last 50 years. And then again, Warren Buffett bought Apple in Q1. Here, when it hit 150, he was buying for 1 day and spent 600 million. Then he stopped when it went again up. I'm really curious whether he's now buying more. As he said, unfortunately the stock went back up, so I stopped. Otherwise, who knows how much we would have bought. So he's buying more, even if you look at his portfolio, Apple is 42% of it. And he's happy buying more. So what's wrong with the old dude? Is he really that demental that something going down, 42% of his portfolio going down, makes him happy? No. Well, it makes him rich. That's how you get rich. Buying more of a good thing when it is down. So I hope this gives you an orgasmic perspective on the market, because that is the secret of wealth accumulation. Your investment returns depend on business performance, if you have a good business, and then on price paid. The lower the price, the better, because business performance at a low price allows for higher rates of compounding. As Buffett said, nobody knows where stock prices will go in the short term. It's irrelevant. You cannot predict it. If you are in that prediction game, you're toasted. You're already lost. If you are in the wealth accumulation game, then lower prices mean better returns. If it goes even lower, you simply buy more, you wait it out, you reinvest the dividends, and you end up wealthier. That's it. Look at this. The price-earnings ratio of the S&P 500. Of course, these earnings were a little bit pushed higher, so it might be a little bit higher, lower. Let's say the average CAPE ratio is a little bit higher, but still, the lower the better. Lower PE ratios, better returns. And if you don't understand it, this is your opportunity to start investing, to start accumulating wealth. Now that everybody is panicking, now it's the time to do the opposite. Oh, of course, stocks can go down another 50%. You cannot predict it, but when I say now it's the time to do the opposite, I mean over the next years, starting now. Because you are all in the accumulation phase, my friends. Yes, you are. And how? Spend less than what you make? Very easy, but core principle of investing. Invest in businesses, compound, own those businesses, forget about stock prices and enjoy life. That's the message. I rest my case. I'll see you in the next video.